Very uncertain environment though, especially in terms of what the government's going to be doing in reducing carbon emissions. The Copenhagen has been called, no Copenhagen, and then the ETS is due back here in Australia before the Parliament again in February, but there's no certainty that it will get passed yet again. I mean, what are you doing on trying to work out what to bank on going forward when it's all so uncertain?
Yeah, look, in our business modelling, we're allowing there'll be a certain impost to pass through. The retail model works very much on whatever the regime is, the cost will get passed on to the consumer, and the government has talked about compensation for certain income groups for any costs of the carbon tax. So the carbon scheme, the retailer isn't designed to absorb those costs. That's not what the business is set up to be. It's more of a pass-through mechanism between the wholesale and the retail, and we will see those costs go into the wholesale cost of the business. Although the CPRS legislation wasn't passed, the extended renewable energy target legislation was passed, which does increase the amount of green energy from about 2% to 20% by 2020. So there is a dramatic rise in costs coming in through that regime alone, which will allow for new generation forms in the market. So we're going to see a natural rise in costs irrespective of the CPRS legislation, just through the extended renewable energy legislation that did go through. So you will see retailers having to buy more green energy from the green energy certificates, which are created by green energy providers, going forward anyway.
Is that more expensive too because where that's generated is often more remote, so accessing it then is making it more expensive?
There's no question that green technologies are more expensive than coal or gas-fired. And part of the carbon tax is to try and get them on a more equal footing so they become a more viable technology in their own right. But certainly wind and solar are more expensive than coal, there's no question about it, and that's one of the big debates that we have. Australia has abundant amounts of coal, which is a very efficient form of generation and low cost, but it comes at a cost of carbon. So that's one of the challenges.
Yeah, certainly. Also, too, we've seen a lot of the solar rebates has been, or certainly the tariffs has been something that's been in focus over the past year or so. But for the energy retailers, it has added what extra costs for you in terms of administration?
Well, certainly difficult to administer. I mean, one of the frustrations we have through the Energy Retailers Association is the fact that each state has its own regime to comply with. So the rules are different in each state, the structure is different in each state. So we're very much pushing for a national energy framework so that the rules will be at least consistent, so we'll have one legislation to comply with. But certainly things like solar feed-in tariffs are difficult to manage for a retailer. It's not impossible, but it adds extra burden, and there is some fairly serious questions about whether they really add a lot of value as well, because people who install them are sort of socialising the cost amongst people who don't have them as well. So in the way the regimes work, because the retailers do get rebated for the increased cost of the energy.
I guess going forward then, what do you see as the key challenges for your business in 2010 then? I mean, there's a few there to begin with.
Yeah, look, I see less challenge in some of the legislative issues that are going on at the moment, and more challenges more directly related to the company itself. We're seeing ourselves turn towards a profit this year, which is great. I mean, we are probably one of the fastest growing companies in Australia at the moment on a percentage basis. It's gone from a $0 to $100 million plus revenue forecast for this year in just over a couple of years of trading. So it's a very fast growth. So the challenges for me are related to looking for new markets to enter and to continue to deliver the financial results. The compliance with the legislation that goes forward is part of the business running, so it's not a more of a challenge, it's more of a compliance issue that we have. So the real challenges for me are the continued growth and delivering on the results that we have so far.
Looking at where you're going to be in 12 months' time, I mean, what do you hope to have achieved by then? Do you want to be in some of those other states where you have licences, sure, offering a service there to customers?
If the conditions are right from a market perspective, like I mentioned before, where we can make a reasonable return on the investment, by the end of this calendar year, we'd certainly like to be in those states, and that's particularly Queensland and New South Wales and Victoria, and the model will be running significantly more stronger than what the forecasts that we've had at the moment. The forecasts that we have in the market at the moment really only contemplate a Victorian market model, purely because we haven't committed into those states at this point in time because we're still doing the evaluation work. So one is to deliver on the results to the market is a primary goal, but if you looked at a blue sky goal, would be to be in those other states by the end of the year. So I think there's plenty of upside there.
Certainly, and I guess just finally, something that a lot of investors look at with any company, but certainly in the small cap space, debt. I mean, what are your debt levels like, and your finances going forward?
So the main debt facility that we run is a working capital facility. So we don't carry particularly traditional debt at the moment. It's more of a facility that links to the accrued revenue in the business. That's a $50 million facility that we have in place. That's not due for renegotiation until June 2011, and we'd be looking to continue that relationship going forward. It is a revolving facility, so we certainly don't face any immediate debt pressures going forward.
Fantastic. Great to talk to you, James Myatt from Australian Power and Gas. Thank you so much.
No worries, thank you.
Well, do stay with us. Plenty more coming up on Summer Market.